Stocks finally reached the rare overbought zone. I do want to say happy anniversary to those who bought the extreme oversold signal last year. We were one of the few research houses out there to say a massive rally is coming soon. You guys might not remember, that was the S&P 500 low last October. The BMI, which we're going to be talking about today, was at an extreme point then. It was oversold. Now we're starting to see the opposite situation where the BMI is in the rare overbought zone. So let's go ahead and look at history since 2018. Let's try to understand and unpack what an overbought big money index is. So here we've got 10 instances since 2018 where the BMI went overbought. This is where we are right now. A couple things you might want to note is that, we don't fall right after we go overbought. It tends to take a little time. The other thing you might want to notice is when we get oversold, these green bubbles, that is a tremendous time to be getting your buy tickets out. But let's zoom in a little bit, go back to Jan 22 through now, and these are the last 4 times that we went overbought. And I want you to notice that the S&P, this is a SPY ETF, it fell soon after. So is that what's going to happen here? Well, we need to crunch some numbers. But listen, you don't want to be getting super aggressive buying stocks when the market is overbought. Here's what we know about going overbought. First things first is that we tend to hang overbought for 21.88 days. Those are trading days. So call it a month. That is the average. Okay, that's since 2014. Now, however, when the BMI falls below 80% out of overbought zone, this is a tremendous study here. Here's what happens. S&P 500 a week later is down 0.9%. Small caps are down 1.3%. Let's zoom in on a month. The S&P 500 is down 1.6%, and small caps do worse at negative 2.7%. Let's round it out 2 months. S&P is down just over 2%. Small caps are down 4% and change. Even the NASDAQ is down 1.5%. So basically what this is telling you is that we could be in a period where stocks are really wobbling and they're not going anywhere. And this is due to a lack of buying under the surface. That's what the BMI is there to help us understand. Does this mean you want to go sell everything? Absolutely not. What it tells you is that the level of buying, the level of participation likely isn't going to stay this high. We need to get a healthy pullback. And that's what Map Signals is all about. So make sure that you are following along with our data week after week. It is a great time. Very few people last week were even mentioning that markets could possibly go down. When we wrote this piece, people were writing in saying it's probably not going to go down. Listen, don't trust feels, trust data. The BMI is there to help bail you out when you can't imagine a change in market trend. You guys have a great one. Remember, buy on dips. Most importantly, follow the data.